Back to the cost of living crisis now, and joining us live is the well-known economist Chris Richardson. Chris, good to see you, the man with all the answers. 5 rises in a row we've now had, so how many more are we going to cop?
We will be getting more. There was some speculation that the Reserve Bank might give a hint in their statement yesterday that they'd be slowing down. Some people think they did. Most people, and including me, think they didn't. Basically, even though we've already seen the fastest rate of increases in interest rates in Australia since 1994, there are more still to come.
How many?
I would be hopeful that the Reserve Bank actually only ends up adding another half percentage point. The consensus among economists is that there's probably something closer to another full percentage point still to come.
Do you think he should have gone harder just to get this all over and done with?
No, I don't, because to some extent families and businesses have to react gradually to changing circumstances. If you really stomp on the brakes, you can have a bigger impact than you intended to have. And the thing we really know about interest rates is that it takes a long time for changes in rates to fully play through. The Reserve Bank, for example, is forecasting that the unemployment rate by the end of 2024 will be more than half a percentage point higher than it is today. It takes time for that to come through, and that's part of the reason why it's a little bit dangerous going at this pace.
Okay, according to data, Chris, household spending in July still 18% higher than it was a year ago. So with all of the hikes, why is that still so high?
Basically because we're still very cashed up after that coronavirus period. Governments gave us extra money, but often we did not have the chance to spend that money. And that combination means that Australian families are sitting on more than $250 billion extra in savings. It's a similar story in the US. Overnight, we saw there that consumers really aren't slowing down as much as people expected. Therefore, the US and Australia aren't as close to recession as some people claim, and that says central banks here and there keep going.
What about those who don't own a mortgage at the moment? How much of an impact are they having?
And to be fair, there are more savers than there are borrowers in an economy, and for many people, it's good news as interest rates go up for the first time in a very long time. The overall economic impact, though, even though there are both winners and losers, is higher interest rates equals weaker economy.
What are some quick fixes here, Chris, to help people get by?
There aren't any, because the economy has such a low unemployment rate. If the government tries to help at the moment, that merely results in the Reserve Bank raising interest rates further than otherwise. There is no free lunch. Sure, if the government did extend that fuel tax cut, people would think they're better off, but it just sees the Reserve Bank take that same money back out again.
So we've just got to cop it. People have just got to cop it. Until these longer term policies come into play.
We have the tiger by the tail. To be fair, it's hard for interest rate rises in Australia or anywhere around the world to stop a war in Europe, to stop floods here in Australia, to change the way China is juggling COVID by closing down its cities. It's those things that are driving a lot of the inflation that we're suffering. Those impacts are largely temporary. But we have this tiger by the tail.
Okay, I mean, the government will point to the fact that there's been an increase in the minimum wage. Pensioners will be able to work for a little longer without that affecting their tax benefits. There's been a few changes that they will point to in the short term. I mean, how much of an impact is that going to have at the end of the day?
Not an enormous impact. That minimum wage rise and associated increases go to almost a quarter of the workforce, but they don't earn a heap anyway. If you look at overall wage inflation in Australia, it's half of what you're seeing in the US. And that's a good thing if you're fighting inflation.
Okay, that's true. Just a final one here. What do you expect the GDP figures to show today, Chris?
A little less than 1% in the last 3 months. That's a pretty solid rebound from the Omicron numbers we saw earlier in the year.
Right. And just a final one here too. I'm just thinking stage 3 tax cuts. Do you think the benefits still outweigh the negatives by pushing ahead with that, or should they be wound back?
They should be wound back, but they shouldn't be abandoned. Those cuts were always too big. People talk about the fairness. The fairness aspect is overstated, but they should wind it back, perhaps by keeping the 37 cents in the dollar.
Okay. Chris Richardson, always good to chat. We'll talk to you soon.